The 21st century has been a time of significant economic change for Russia. After the collapse of the Soviet Union, Russia embarked on a path of market-oriented reforms. These reforms, however, were often implemented haphazardly and accompanied by widespread corruption. This led to the rise of a system often described as state capitalism or kleptocracy, where economic and political power became deeply intertwined. The Russian economy has experienced periods of rapid growth driven primarily by high oil and gas prices. However, this dependence on natural resources has also made the country vulnerable to global commodity price fluctuations. Russia's economic performance has been closely tied to the price of oil and gas, creating a boom and bust cycle. This has been particularly evident in recent years, as the country has grappled with Western sanctions and the economic fallout from the conflict in Ukraine. Despite these challenges, Russia has made strides in developing certain sectors of its economy, such as technology and manufacturing. The government has also implemented various policies aimed at promoting economic diversification and reducing the country's reliance on energy exports. However, structural issues such as corruption, lack of transparency, and weak rule of law continue to hinder Russia's long-term economic prospects. The future of Russia's economy remains uncertain. The country faces significant internal and external challenges, including the ongoing conflict in Ukraine, Western sanctions, and a volatile global economic landscape. Whether Russia can overcome these challenges and achieve sustainable and inclusive economic growth will depend on the choices made by its leaders in the years to come. Russia possesses vast reserves of natural resources, particularly oil and natural gas. These resources have played a pivotal role in shaping the country's economic trajectory. The energy sector has been a major source of revenue for the Russian government, accounting for a significant portion of its budget. This revenue stream has allowed the government to fund social programs, invest in infrastructure, and maintain a strong military. While energy exports have been a boon for Russia, they have also created a significant dependence. This dependence has made the Russian economy vulnerable to fluctuations in global energy prices. When oil and gas prices are high, the Russian economy thrives. However, when prices decline, the economy suffers. This volatility has made it challenging for Russia to plan for the long term and has hindered its ability to develop other sectors of its economy. Recognizing the risks associated with energy dependence, the Russian government has made efforts to diversify its economy. However, these efforts have been met with limited success. The energy sector continues to dominate the Russian economy, and the country remains heavily reliant on oil and gas exports. This dependence on a single sector has significant implications for Russia's economic stability and its ability to navigate global economic challenges. The early 2000s marked a period of remarkable economic growth for Russia. This growth was largely driven by a surge in global oil and gas prices. As the world's demand for energy soared, particularly from rapidly developing economies like China, Russia, as a major energy exporter, reaped the benefits. The influx of petrodollars fueled a consumer spending boom, boosted investment, and led to a significant improvement in living standards for many Russians. The Russian government, flush with oil revenue, embarked on ambitious infrastructure projects and social spending programs. This period of prosperity saw the emergence of a new middle class in Russia, eager to embrace Western-style consumerism. Shopping malls proliferated, foreign cars filled the streets, and international travel became increasingly common for ordinary Russians. However, this period of economic prosperity masked underlying structural weaknesses in the Russian economy. The country remained heavily reliant on its energy sector, with little progress made in diversifying its economy. The government's economic policies, while seemingly successful on the surface, did little to address deep-seated issues such as corruption, lack of transparency, and an overdependence on state-controlled enterprises. This over-reliance on energy exports and the failure to address fundamental economic weaknesses would come back to haunt Russia in the years to come. When oil prices plummeted in the mid-2000s, and again in 2014, the Russian economy was left reeling, exposing the fragility of its economic model. The mid-2010s marked a turning point for the Russian economy. The annexation of Crimea in 2014 and Russia's involvement in the conflict in eastern Ukraine triggered a wave of Western sanctions. These sanctions, targeting key sectors of the Russian economy, including finance, energy, and defense, were designed to pressure Russia to change its course in Ukraine. The sanctions, coupled with a sharp decline in global oil prices, sent the Russian economy into a tailspin. The Russian ruble plummeted in value, inflation soared, and foreign investment dried up. The sanctions made it difficult for Russian companies to access international capital markets, hindering their ability to refinance debt and invest in new projects. The economic downturn led to a decline in living standards for many Russians, as wages stagnated and unemployment rose. The Russian government responded to the crisis with a mix of fiscal and monetary measures. The central bank raised interest rates to combat inflation and stabilize the ruble, while the government implemented austerity measures to curb spending. These measures, while necessary to stabilize the economy in the short term, did little to address the underlying structural issues that had plagued the Russian economy for years.